This is America's Roundtable. Visit us at americasrt.com. Follow us on Twitter at americasrt. You can find us on YouTube and Facebook. Like and share. We are pleased to be joined by Dr. Steve Hanke, a professor of applied economics and co-director at the Institute of Applied Economics, Global Health, and the Study of Business Enterprise at the Johns Hopkins University in Baltimore.
Whatever party is in there, government expenditures as a percent of GDP, federal government expenditures, have bounced around in this range, and now they are outside the range. They're higher than the historic range has ever been. Now, this is another uncertainty thing. Mm-hmm. This worries people. They don't really know we're going to be able to get it down again. It's a confidence thing because President Reagan, during his first term, he came in and he had good conservative credentials, and people believed him, and they had a lot of confidence in him that he was going to, squeeze the government down. Now, what happened? Well, we went into a recession because monetary policy was way too tight with Paul Volcker as the chairman. Actually, he had some dials that weren't right on his speedometer, on his dashboard. We had in 1981-82 quite a severe recession, and in addition to that, we had a big military spending buildup with Reagan. So we had quite large deficits actually when Reagan came in. People weren't worried about it because they trusted the guy. Mm. and they knew at the end of the day he would bring things down. Now, by the time he finished his second term, he actually had government expenditures being slightly below, as a percent of GDP, than where they were in 1980 when he came into office. So he did. There was some justification for their confidence in him of keeping the thing under control. We're getting to this confidence and uncertainty, and once you get up above normal ranges or below normal ranges, people get worried that something strange is going on, and we're not operating like we have for the last 40 or 50 years, and that's where we're at now.
Retail sales dropped for 3 straight months. And in his most recent appearances before Congress, Bernanke repeatedly said that central bank officials would consider more action if unemployment failed to improve. They announced at one point in time Operation Twist, which is similar to what you described with changing the maturity, getting a short-term loan to buy long-term debt. However, the government debt would increase in that operation. With his constant concern about inflation, and there is a real risk when you are loosening monetary policy to increase inflation. How do you see this all evolving with the current economic situation and Fed's action?
I think the Fed will just do the wrong thing because with unemployment high, they will go into more expansion. There's no question. I think that they'll go into more expansive stance than they have now. Whether it's now or in September, they've got another open market committee meeting in September. It'll be tricky because, of course, it's right before the election, but there's enormous pressure. The Fed follows the unemployment rate, and the unemployment rate is going to be very bad, and it will continue to be bad until the money supply starts increasing. The broad measures of money, including these privately produced big chunk, 85% of the total being produced by the banking system, the commercial banking system. And I think the Fed will end up with applying some kind of quantitative easing program, whatever they call it. I don't have a clue, whether it's twist or turn or you name it. And it will just be the wrong thing because they will reduce everybody's confidence because the upshot of the thing is they'll be increasing the amount of debt.
Right.
But at the end of the line. Now, with my debt market operation, debt is not increased. Remember, you're buying up long-term debt with my proposal and putting it in a shredder and eliminating it and substituting the amount that you shredded of the long-term debt with short-term debt you have given the banks because you borrow money from the banks. There are some people that are starting to talk about the proposal that I've just put up in this August Globe Asia column, and who knows? I mean, maybe they'll see the light quickly. Well, some people at the Fed, actually, the article that you mentioned, it is circulating among finance ministers around the world as well as some Fed officials. So maybe they'll end up doing the right thing. My guess is if history is a guide, they'll just do the same old thing they've been doing before that hasn't worked.
Mm-hmm. Right, that would be unfortunate.
Dr. Hanke, it would be remiss of us not to talk about some of the broader issues affecting our globe. We live in an area when the integrated transatlantic economy matters, and we had a discussion very briefly with John Willman, who served as the chief leader writer for the Financial Times, as well as the UK business editor at the FT. We have noticed that the Eurozone debt issue is very severe. There is a tremendous concern that the whole project is under threat. From your perspective and your travels and visits and your working relationship with finance ministers around the world, how serious is the problem in Europe?
First of all, Joel, we don't really know what the project is.
That's a very good
the European project. So that's part of the problem. I mean, the problem is not the euro, meaning the currency. The problem is that the countries that are using the euro and are in the so-called eurozone have implicitly bought into something that is undefined. In other words, what they're trying to push now isn't really necessarily fixing the euro, but they've got all this other stuff bundled in there. Some of it, we have some vague idea. They want a fiscal union, they want a political union, and get rid of national sovereignty, and God only knows what else. But that's the problem. No one knows what else. It was just the currency. The thing could be dealt with and fixed in short order. But all these other things are either undefined or just even the thought of a political union is going to take decades before there would be some kind of... It's just impossible to create a political union, a real federal union in a short period of time, and we're in a crisis and it needs short-term kind of solutions. The problem ultimately is one of a lot of uncertainty about just what's going to happen in Europe. And my own view is it's pretty bleak because, again, the money supply dominates in the short term, with the exception of Germany. Germany's right on my trend rate of growth, but all the other countries are deficient and down below. So they're and some are just it's catastrophic. I mean, Greece, they have like a 30% money supply deficiency, but Spain is about 20%, a little over 20% deficiency. So all these countries we're reading about that are really in trouble have these big money supply deficiencies. Now you say, well, why is that? Because the European Central Bank, the so-called ECB, is doing what the Fed's doing, exploding the money supply, the state money that they're producing. But the problem is state money is peanuts compared to the big, broad money picture. And the banking systems are essentially, in Greece, they've imploded, and in Spain, they've imploded, meaning you've had huge amounts of deposits and capital flight going out of those countries, meaning that the money supply, it shrinks. And there's a tremendous deflationary pressure, downward pressure on economic activity in those countries as a result. I think the thing's going to end, in fact, very badly, because the politicians, if you look at what they've been doing, Joel, they've been going from one emergency meeting to the next meeting. They don't even know.
That's right. That's a very good point.
I mean, the Spaniards went up to Brussels. They signed some agreement. This is about 3 weeks ago. And flew home, and once they got home in Madrid, they read what they'd signed, because they didn't know what they'd signed. And of course, then they objected violently to the agreement. It's the blind leading the blind. I mean, they literally don't know what they're doing. I mean, You have to realize politicians generally actually have almost no knowledge or information of essentially anything. In a crisis, to fight a crisis, they're almost hopeless, and they're really at this point, more trouble than good.
Right.
Say.
Unemployment in the euro area exceeds 11% and is rising compared to the U.S. economy, which is at 8.2% unemployment. Eurozone gross domestic product hasn't grown since the third quarter of last year. By contrast, U.S. economy hasn't grown much, but it has grown by 1.5% in the last quarter. At the same time, China is slowing down, so Europe's troubles are worsening. Can America continue growing unaffected by these developments?
The short answer is no. I mean, the world economy is connected in many, many ways, and some of them simple, some of them complicated. But the bottom line is that the U.S. or any other economy that's a real economy is not hermetically sealed. And not kind of a satrapy type of operation where there's no connection. So yes, it will be affected. What you alluded to, that what's interesting is that in a way, as bad as things are in the United States, in absolute terms, in relative terms, they're not bad, that bad.
Right, exactly.
So you wonder, well, this explains why capital keeps flowing into the United States. As much as they've made mistakes and the economic freedom in the United States measured by, Heritage Foundation and Fraser Institute, Cato Institute, all these outfits, or the World Bank doing business report, the U.S. is actually sagging now. It's going down, and who's on top is usually, you got Singapore, Hong Kong.
Exactly.
Right.
A few places like that. The U.S. economy is definitely in sick bay with lots of problems, but all these other countries are in the critical care unit.
Dr. Hanke, your insights are always very useful, very helpful, and we encourage our listeners to visit the website, and on americasrt.com we'll be placing links and how people can actually read your most recent article that appeared in Globe Asia, and just encourage our individuals to Google your name, Steve Hanke, and get more information about your insights into what we as citizens and taxpayers ought to be aware of, and what legislators, actually, elected officials, ought to be looking at in regard to growing our economy. Thank you, Dr. Hanke, for joining us, and we look forward to continuing our discussion in this area.
Thank you, Natasha and Joel.